Right, okay, welcome back to the channel. This is the final episode in our series of crypto beginners tutorials. This is the practical application. We're going to put all the steps together and I'm going to break it down into 5 steps for you. We'll show you how to bring structure to your trading plan. We'll look at stops, we'll look at targets, we'll look at risk management, and we'll go through that all together. So just want to say thank you to all our new subscribers. We're on the road to 1,000 now. We'll have a party when we get to 1,000, and we appreciate every single one of you that's viewed our content, that subscribed to the channel, and that comments in the comments below. So thank each and every one of you. This is all due to you. Appreciate you all. Let's get into the video, guys. Right, here we go. I said I was going to break it down into 5 easy steps, so that's what we're going to do. This is going to be step 1. Before we get into step 1, what I want to do is ask you one question. Do you know what type of trader you are? Have you analysed the charts previously? Do you think that you've got an edge with a breakout? Do you think you've got an edge with a trend continuation? Do you like pattern trading, flags, pennants? Are you an advanced trader, bats, Gartleys? What type of a trader are you? In this example, we're going to use a trend continuation, and the reason for that is because this is a beginner's series of tutorials and we've always got a higher probability of looking at continuing with the trend. So there's a higher probability of trend continuation, and that's the reason that we're going to do this. So let's get into it. First and foremost, what we're going to do is identify the trend in the higher time frame. So let's go into the daily. I've got Bitcoin here currently on the 4-hour. Let's get into the daily and have a look at that. Right, okay, so we've got the daily chart, and this is going to be our higher time frame analysis. What's your higher time frame analysis going to be? How often are you going to be at the charts? That's what you need to ask yourself. Are you going to be there all day? Do you have a full-time job? Are you only going to get to analyse the charts at the weekend? That's what you need to build your trading plan around. So if you can only be at the weekend, you're going to use the monthly as your higher time frame analysis as an example, and then possibly your daily or your weekly as your trading time frame. So build your time frame analysis around your own trading plan. In this example, we're using the daily and the 4-hour chart. So what we need to do first and foremost, we're in the daily and we need to identify the direction of the trend, because remember, this is a trend continuation strategy that we're going to create here. So we're going to be looking at identifying the direction of the trend and looking for an entry to go with the flow of the trend. So you can see that on Bitcoin on the daily, we're making a series of lower highs, lower lows, lower highs, lower lows. So we've identified the trend in this example and we're bearish. Price actions move into the downside. So are we allowed to take a long here? No, we're not, because we're looking at an entry in the direction of the trend. So what we'd want is a pullback to the previous swing low, and then some kind of a confirmation, lower low, lower close, double top here. The price action is going to continue back in our direction. So that's what we're looking for. We're identifying an entry and we're looking for areas where price action is going to give us a higher probability that the trend is going to continue in the direction of our prediction. So that's the higher time frame analysis. You pick your time frame analysis on how it is that you like to trade and how often you're going to be at the charts, but that's step 1. Right, okay, we've identified the trend. In this instance, on the higher time frame, we're in a bearish trend and price actions move into the downside. We're looking for areas where we can take advantage of that price action and continue with the trend. So if you recall, in the first episode, we looked at the application of trend lines. We're going to apply our trend line to this, and we're not looking for longs, remember, we're looking for shorts. So we're in short term bullish trend, but longer term bearish trend. So this is exactly what we want. And if you remember what is a trend and what constitutes a trend, and you remember if we apply the trend line, we said that a minimum of 3 touches. Some people say a minimum of 2, I like a minimum of 3. So you've got 1 touch here, 2 touches, 3 and 4 touches. So what we're looking for is areas where the market's going to be overheated, and that's where we can apply the stochastic. So if you remember how you apply the stochastic, just go into indicators and type in stochastic RSI. If you've got the free version of TradingView, you've got up to 3 indicators that you can use, so stick the RSI on there, and I've got mine set up at the bottom here, and you can see that the market's overbought. So we're overbought in the 4-hour, and we can see that price action is overheated, and at some point it's going to make a move to the downside, and we can tell that by this momentum trend line here. So we've had, remember, 4 touches of this trend line, and what we're looking for is a break of momentum at this trend, and once we get a break and a close below here, we can look at entering. Now, is it a good time to enter if you get a break and a close below there? For an example, if you get a big bearish candle that comes straight down here and closes, it's not a good time to enter, because you're looking at putting a stop loss, which is very important. You always apply a stop loss, otherwise you could lose a lot more than you expect. Crypto's a volatile market, so you always use a stop loss, and it's always best to get the tightest stop loss as possible. So if we had a candle that come here, for instance, closed below there, and we applied a stop loss to that, we could get a higher risk to reward, and this is where risk management's key. So you've got stop loss below or above. In this instance, you've got your stop loss above the previous swing high, and then your risk to reward. What's a good time, what's a good position to take risk to reward? The previous swing close is always the higher probability, as far as my back testings proved to me. So you get a close below there, and you're entered with a risk to reward of 2.22, which is indicated by this tool here, this short tool, which is on TradingView. So that's what we're looking for, and if you can see that the previous example, if that candle closed below there, we've got a risk to reward of 0.26. It's not actually worth it. It's not worth taking it. There's a higher probability that it might continue to the downside, but you need to build your rules where you're taking trades that have a higher probability and a higher risk to reward. So that's step 2, guys. Apply the stochastic RSI, apply your trend line, and look for your setup. So we're looking for the future setup, and let's get into step 3 now. Right, okay, this is step 3 now, and we've looked at higher time frame analysis, we've identified the trend, we've looked at applying our trend line, applied the stochastic RSI. Now we need to think about where we're going to predict where we can enter from the next move. We'll give you a quick example previously at step 2 as to an area as to where we could enter the market, but you really need to be more strict with yourself and have rules of entry. So one rule could be, like the previous example, that we do need that close below the trend line to show that there's a weakness in momentum. You remember, this trend line's an actual momentum trend line, so it's given us an indication as to the current momentum. We've got the stochastic at the top in this example, which is showing us that the market's in a overbought area, certainly on the 4-hour, so we're due some kind of a pullback at some point soon. So we're currently coming back to test this trend line again in the 4-hour on Bitcoin. So if we do get weakness when we get to this trend and the stochastic starts turning to the downside, we get the close below the trend line, that could be an area for entry. And then don't forget, we need to apply the risk management. So what's your minimum risk to reward? I like to use a minimum 1.5 risk to reward, and you need to tell yourself that. I wouldn't recommend using any kind of leverage above a 1, and none of this is financial advice whatsoever, but I certainly wouldn't recommend leverage for beginners. So don't touch leverage, and you're looking at making sure that you've got the tightest stop possible. So you've got your minimum risk to reward of 1.5, and then you need to think about your capital too. What's the maximum capital that you're willing to lose? And don't think about how much you can win, think about how much you can possibly lose. So protect your capital is first and foremost the first thing that you should do. And if you're greedy with your entries and you get your tighter stops, it'll pay off a lot more in the long run, because you can be wrong more times than you're right and still have a higher probability of coming up strong. So you need to think that tightest stop loss possible, and in this example we can get a pretty tight stop. You can see we get a pretty tight stop if we come back and test this trend line here, and we get a close which is not that strong below, showing weakness in momentum, you see that we've got an indication that price action's already reacted once, twice, 3 times at this level. So the buy orders are getting eaten up and eaten up and eaten up, but it's a bit of a sell wall here at the moment, and it means that we can get a tight stop by just putting our stop loss above these key points where price action's tried to break through and hasn't managed for so many times. So that's how you get your tight stop loss, and you need to tell yourself what's the minimum risk to reward that you're prepared to take. So in the example, if we're closing for the previous major swing low on this time frame, which is here, and I like to go for the candle close rather than the extreme low of that, because there was a lot of price action and a lot of buy orders here, so price action is likely to hit this level and react at this level before it does the extreme low. So the example, we've got 3.14. If we do manage to break and close below here and not have a major candle close, if we do have the major candle close, you need to remember, ask yourself how low you're willing to go. Be greedy with your entries, I'd always recommend that. So build that within your trading time frames, build that within your strategy, and ensure that you get the best entries possible. So that's step 3, is to predict the market. And if you don't get to beat the trade and you've sat at the charts for such a long time, don't feel that you need to enter the trade, because most of the time your entries aren't going to set up correctly. So don't be greedy, be always greedy with your entries, and don't worry if your entry doesn't set up the way that you predict it. Just make sure you stick to your rules and your trading strategy, and build additional rules around your trading strategy that suit you. So as an example, what I would recommend that you do if you are a beginner is go on the charts, don't trade anything, and then just bring up a spreadsheet, bring up a trading journal, and just log all your trades and find out what works for you and what doesn't work for you, and ultimately how much money you would have lost and how much money you've gained by not actual trading in real time. So I'd recommend that you go and do that. So that's step 3, and that's the prediction. Be greedy with your entries. So step 4, you're either going to love me or you're going to hate me for this one. Step 4, what I want you to do is go onto the subscribe button, hit subscribe, hit the notification bell so you're aware of the content that we create and when we create it and when we release it. We want to thank each and every single one of you. We're growing really quick. Thank you very much. Appreciate it. So hit that subscribe button, guys, and don't forget the notifications. And I'm going to combine that step with another step 4, which is going to be patience. So you remember, we've just looked at Bitcoin and we're at an area where it's testing the trend line again, and we've got to have patience. So step 4, the real step 4 is patience. But I do want to thank all of our subscribers, appreciate each and every single one of you. So patience is the key, and is it going to meet our setup? We're going to find out. Is this candle going to close below there? Is it going to break the trend and show weakness in momentum? Is the stochastic going to have a bit of a pullback? You need to build this all into your rule set. Is your rules that the stochastic's got to be overbought or oversold? It should be overbought in a downtrend if you're continuing the trend down, and oversold in an uptrend if you continue with the trend up. So it's a bit of a mixture between a trend continuation and a breakout strategy. The breakout's the confirmation of entry, and you need to ensure that you get the adequate risk to reward. So patience is the key, and that's step 4. But don't forget to subscribe. Here's step 5. Right, okay, final step, step 5. This is going to be the execution and the protection. Do we enter? Do we not enter? You remember we've talked about the time frames, we've talked about the risk management, why that's important. I just want to talk to you a little bit more about capital. So if you've got $100 in your trading account, would you be putting $100 on this next trade? No, you wouldn't. Would you be applying a high leverage? No, you wouldn't. The first and foremost thing that we're doing is protecting our existing capital. Don't worry about how much you're going to win. Don't worry about how much, well, do worry about how much you're going to lose. So first and foremost, how tight can you get your stops? Remember, we talked about being greedy with our entries, but we need to protect our capital. So whether you've got $100, £100, $1,000, £1,000, whether you've got £1 million, first thing that you need to do is protect that capital, because once you start losing that capital and you continue losing that capital while you're learning how to trade or you're learning how to prepare a strategy, then that's capital that you haven't got when you take it all seriously. So you'll just end up blowing your accounts, learning on what works and what doesn't work. So first and foremost, protect your capital. Secondly, I recommend that you go through and you back test, you live test, and you do this all in real time, but you jot it all down and you don't actually put money on it. You just actually find out what works best for you, find out how often you can be at the charts, create a structure, create a trade and plan around that, and just get into it without actually putting the money on there. That's what I'd highly recommend. So step 5 is the execution and protection. Now, as a rule, I wouldn't enter this until the candle's actually closed. You can see that we've got a little bit more weakness on this Bitcoin in the 4-hour chart, and if we enter now, we'll probably get a higher risk to reward. However, there's also a chance that this is going to pop back up into the trend line and then go for another move up. The stochastic at the top can stay at the top for quite a long time, as indicated by these previous levels here, so there's no reason why this can't do that again. So you want the candle closed below the trend line, the momentum line, before you're even thinking about entries. You can enter 50% here, and then you can enter 50% as a confirmation. And just as an example, this is what that would look like. You've come down, you've broke, you've closed below here, you've come back, you've retested this as confirmation, and then you could continue your move down to where you've predicted take profits are going to be. So you can split your you can split your entries 50%, you can split them 33%, you can split them however you want, and you can also do that with laddering out with your take profits as well. If you're a trend continuation, you might want the trend to go a little bit further. You might want to apply a Fibonacci on the 1.618 or the 1.272 as target 2. You might want to take 2/3 at take profit 1, 1/3 at take profit 2. But I'm just trying to simplify this with you guys. So just this example, we're going to use the candle close below the momentum line, and then we're going to take profit at the close at the previous major swing low. So we can't take anything yet because the candle hasn't closed. There's a chance it's going to go back up, and it could even make a higher close and continue for a higher move as far as we're concerned. So we're waiting for probabilities, and we're waiting for our appropriate entries. And you can see that in this example, if the candle did close at this level, we've got that tight risk to reward here. So we've got the tight risk to reward there. So that's exactly what we would want if that candle did close below there, and that's how you can be greedy with your entries and how you can protect your capital. So I hope you liked the final episode in this series of tutorials. We're going to be looking at some real-time technical analysis with the crypto market at the moment. It's a possibility that there's a chance that it's going to have some kind of a pullback soon, so we'll be looking at that in the next few videos. Thank each and every one of you again. Appreciate all our subscribers, appreciate our crypto family. Leave a message in the comments if you didn't understand anything, if you need help with anything. I'll be happy to go over it with you individually or as a group. Just let us know exactly what it is that you guys want. Be careful, we're getting lots of spam on the comments, so don't subscribe, don't give anyone any money. We won't ask you for any money, so be careful of the spam in the comments, but leave a comment and we'll get back to you. Thank you all again, appreciate you guys, enjoy the rest of your weekend, take care now.